Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're talking about the large company exemption from the beneficial ownership reporting mandate, looking ahead for a discussion of the fundamentals of the tax proposals and policies that we'll see in the next presidential administration. Sign up for our October 3rd webinar, Election 2024, Navigating Proposed Tax Changes. Get details and register at spiedel.com under webinars. Effective January 1st, 2024, the Corporate Transparency Act's mandate requiring most small and medium-sized businesses to file beneficial ownership information, or BOI reports, went live. Under the mandate, reporting companies must file a report with the U.S. Treasury Department's Financial Crimes Enforcement Network, or FinCEN, providing specified information concerning their beneficial owners. The Corporate Transparency Act was enacted as a means to prevent money laundering and other schemes used to fund criminal and terrorist enterprises. The mandate is being phased in over a 2-year period, with newly created entities formed in 2024 required to start reporting in 2024, and entities in existence prior to 2024 required to file no later than January 1st, 2025. The vast majority of small and medium-sized businesses that form with a state Secretary of State office are subject to the Corporate Transparency Act's reporting requirements to FinCEN. Most larger companies are exempt from these reporting requirements. However, the exemption's definition of large will apply to many companies traditionally considered to be small. An exemption is available for large operating companies, which are defined as an entity with the following: 20 full-time U.S. employees in the prior year. A full-time employee is one who is employed an average of at least 30 hours per week. Employer aggregation rules do not apply. A U.S. physical office, and that filed a federal income tax return in the prior year with more than $5 million in U.S. gross receipts or sales, determined on a consolidated basis for taxpayers filing consolidated returns. Receipts or sales from outside the U.S. are excluded in determining the $5 million threshold. Part-time employees do not count toward the 20 full-time employee thresholds. For purposes of the BOI reporting requirements, full-time employees are those who work at least an average of 30 hours per week. There is no full-time equivalency test applied. The definition of full-time employee is the same definition used for purposes of determining whether a business is a large applicable employer under the Affordable Care Act. Businesses must evaluate their eligibility for the exemption each year based on their number of full-time employees or gross receipts for the prior year. If a company relying on this exemption subsequently files a tax return demonstrating less than $5 million in gross sales or receipts, and it no longer qualifies for the large operating company exemption or any other exemption, it has 30 days from the date of the tax return to file an initial beneficial ownership information report. Attend Spiedel's Federal Tax Update webinar and be prepared for the upcoming filing season. This 8-hour course will cover everything that happened during the year, and you can see a list of topics covered and get registered at spiedel.com under webinars. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.